Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance. Here are your hosts, Lucas Muzialski and Leo Severino.
Hello and welcome to episode number 6 of the Wall Street Lab podcast. In today's episode, we're going to do something slightly different from what you're used to. So instead of interviewing someone that focuses on a specific area of finance and try to understand how they do what they do, we decided we'd tackle a topic that I believe the majority of you will be familiar with and have thought about, and that is the topic of continuing education. I believe there are hundreds of exams you can take in the financial services industry, but there are only a handful which most of the people will be familiar with. And one of them is, of course, the CFA designation, and that is considered by many the gold standard for anyone who wants to hone their skills in the asset management industry. There's another one, and that is the CAIA designation. That stands for Chartered Alternative Investments Analyst, which focuses specifically on alternatives, meaning hedge funds, private equity, commodities, structured products, and so on. And that is the topic of our episode today. And we had the honor of interviewing none other than the Director of Exams for the CAIA Association, Dr. Nelson Lacey. Dr. Lacey is a professor of finance at the Isenberg School of Management at the University of Massachusetts. He earned his PhD in finance from the Pennsylvania State University, and he's also a CFA charter holder. Professor Lacey has been at CAIA since its inception. He's been active in working on the program's curriculum and examinations, and he became a director of examinations in 2004. Professor Lacey's academic work has led to over 50 publications in finance and economics, and he's also the co-author of the book Modern Corporate Finance, Theory and Practice. So without further ado, please enjoy this very insightful conversation I had with Dr. Lacey. We're very excited to have Dr. Nelson Lacey over the phone for the Wall Street Lab podcast. I had a pleasure to meet Dr. Lacey a couple of days ago here in Frankfurt at a meeting for the CAIA Association, and now he is in Geneva, but he still was kind enough to agree to talk to us over the phone today. So first of all, Nelson, thank you very much for agreeing to talk to us. Now, for those who don't know you, why don't you start by giving us a background about yourself and what you do?
Yeah, absolutely. And thank you, Leonardo. It's really wonderful to be part of the Wall Street Lab. And I know you're doing some exciting things and people are learning a lot. So it's a great pleasure for me to be here today and be part of this. As you said in my background, a professor. I've been teaching finance for over 30 years. So I consider my life's work and career to be doing research and teaching, and that has led down many different paths. One of the, most interesting one as I look back now on the career that's about 3/4 old now is my work with CAIA. And what's so interesting about that is I went and got the CFA designation back in the 90s. Just to give you an idea how long ago that was, my CFA charter that hangs on my wall has a member number that's somewhere in the low 30,000s, and that's very low compared to what it is now. And I went through the CFA program actually as a whim to think about, what I could learn from it, and I learned a great deal. I mean, I teach finance. I consider myself quite learned and up to date, and yet I learned a lot about what we call the traditional finance markets. And from that came an idea that out of Amherst, and I should let you know, the reason I'm talking about Amherst is that the CAIA headquarters is in Amherst, and that's not a coincidence. The finance department at the school that I teach, University of Massachusetts, has, for no master plan, created a group of strong academics in alternative investments. And because of that, we got a chance to meet a lot of hedge fund managers. They'd come up from New York and they'd spend some time with us. And the discussion typically went around the notion of a professional designation in alternative investments. So For those of you who aren't familiar with CAIA, think about that as CFA with a target curriculum almost exclusively in alternative investments. And we talked about that for quite a few years, as I remember. And then right around when the millennial came around, the talk got more serious. And someone put a little seed money on the table and said, why don't a group of you in Amherst who are professors in finance put together a curriculum and put it out there? Let's see if there's a market for this. And we did this in 2002. And in 2003, February, we held our very first CAIA Level 1 exam. The program was set up similar to the way it is today, except it was absolutely brand new. We just cut the ribbon on this. Mm-hmm. And sure enough, about 90 people signed up for that exam. And we were very surprised because imagine this. And to you young folks out there, imagine that you're asked to pay money to study hard to take a high-stakes exam that you may or may not pass in an organization that no one has ever heard of. And so those very brave souls stepped up to the plate, and that was kind of the way CAIA was born. That was back, I said, in February 2003. So let's fast forward now 13, 14 years. We're still a young organization. If you know CFA, they've been around for over 60 years. So here we are 13, 14 years later, an organization that now has members in over 80 countries. We have between 8,000 and 9,000 people that not only have passed the exams, but have become members in our organization. Many, many more people than 9,000 went through both exams. Not everybody is a member. We're going to hit 10,000 members very, very likely in the year 2017. And so if you look at our growth compared to, say, CFA over 60 years, we're actually ahead of them in terms of our percentage increases. Now, we did hit a setback in 2008. The great financial crisis had a negative impact on so many people and so many lives and careers, and us, because we are a designation in alternatives. We're not just hedge funds, but the hedge fund industry and many industries related to alternatives took a big hit in 2008. And it stopped our growth. But we're now back on track. We're growing. People recognize CAIA. And so I guess I would conclude this initial segment as saying that the experiment, can the world absorb a new professional designation in alternative investments, I think has proven to be a big yes, it can.
You used to be the director of curriculum for CAIA, and now you're the director of exams. So you're actually the person who puts together the questions every year. And I mentioned this when I met you a couple of days ago, and I said that you're the person responsible for keeping us up at night. So can you tell us a bit about the process of putting together the CAIA curriculum, as well as putting together the actual questions for each year?
Sure. You mentioned that I, at one point in CAIA's short history, been the director of curriculum, and I was. But remember that there was a time when the number of employees at CAIA total was less than 10, and we didn't have the bandwidth to kind of segment and segregate into specific job roles as we do now. And so I was director of curriculum and exams, and just real quickly, the way that the curriculum works is we seek to answer one main question, and that is, what do professionals in this area need to know? That's what drives us. That's why we put this curriculum together, so that when you go through, in the end, you have now been introduced to the many facets of alternatives and answering that critical question. So what we do is we scan the available resources out there. When CAIA first started, none of the materials were written by us. We used other professionals, usually professors' works, and we put together a curriculum based on textbooks that were available in the field. Now, CAIA produces all of its own core materials. We have a level 1 book, we have a level 2 book. Those are exclusively written by our professionals. But we do connect with the practitioners out there. We have advisory committees. We ask people what's important. Our curriculum is fast-paced. One of the themes in this conversation will probably be, how does CAIA differ from CFA? And here's one way. The CFA curriculum, traditional finance, doesn't change that much. I mean, it really doesn't. I mean, if you think about what's the most important breakthrough in, say, portfolio theory, it was probably Markowitz's work back in the 50s. Still drives a lot of what the CFA curriculum is. And I don't mean to downplay that. I'm just saying that's just the way traditional finance moves. But alternative investments moves at lightning speed. If you wonder, what are the kinds of securities now that are traded in structured products today versus only a few years ago? And they're very different. And the world moves in a fast pace, and the alternative investment world tries to keep up with that, and we at CAIA also try to keep up with that. So we're always changing our curriculum. Our curriculum gets reinforced every 3 years, but we also try to infuse new works of published material that we think is important every year. So that's kind of the curriculum side. Now let me just quickly go into the exam side. Right now my job is exclusively as a director of exams to be in charge of the examination process. That means, if you think of a timeline, developing questions that would be potentially inputted into our universe of questions that sit on the CAIA exam. So those questions have to be written. It's just like any professor writes questions, but we very, very carefully tie every question in our exam to the curriculum. Our curriculum has a study guide behind it. The study guide is full of learning objectives. Leonardo, I know you're very well aware of those, having gone through this thing.
Right.
And we write questions such that any one of them in our database, if somebody would say, where does this material reside in the program? What's tagged as information on every question is the chapter, the learning objective, and even the page number. So we're very specific about that. And the reason I think that's important, and maybe the one really important message I like to bring out to the folks that are thinking about CAIA, is how do you study for the exam? Remember, this is a high-stakes exam. This is very different from taking, Finance 101 and getting an 82 on your exam. This is sitting down in one day for 4 hours and exposing yourself to the curriculum and getting over a hurdle. So you either pass it or you don't pass it. That's why we call it a high-stakes exam. So the students that are asking, how do you study for the CAIA exam? My answer actually is very easy, and it's not inside information. I'm not giving you the secret sauce. I'm telling you, get the study guide, read the material, and understand each of those learning objectives. If you do that, if you go into that exam day having done that, I think the chances are very, very good that you'll pass the exam.
Okay, with the CFA, I know that they do not publish a passing grade because I guess that slightly changes every year based on what the organizers think the candidates should know for a particular exam. How does that process work for CAIA?
Yeah, that's one of the most important decisions we make in the exam area. I mentioned that the timeline of our work starts with developing questions, but then it moves into actually designing the exam, putting the exam out in the field, and I hope we get a chance to talk about that. That is just how do you take the CAIA exam. So we put it out in the field, we get the results, and then we analyze those results, and then we have to set what's called the cut score. So the cut score is a critical piece of information that we put together that we don't, like CFA, that's not public knowledge. Now, but what the cut score does is it kind of distinguishes between those who understand the curriculum and those who do not. So we're trying to figure out the place where we would consider the knowledgeable investor in alternative investments to have at least. So the word at least means if you go above that, obviously you pass, and below that you don't. So I'm not going to be able to give you specifically what that is, but it's related to not only the perception in the field and what must you know to be a CAIA, but also the performance of the group. So we look at the group performance and we say, okay, where is this coming out and where does a good cut score seem to lie? And so that's why we don't say what score you need to pass the exam. Obviously, we tell people what percentage of people pass the exam. So we apply that score, and then we'll at the end say, and this exam cycle, this cohort, 63% were successful in passing. And that information is given to every candidate along with a score report that gives you a lot of good information. So let me just take just 1 minute to talk about the score report, because we're very proud of this. So what we give every candidate at the end is a matrix which tells them in each of the main categories of the CAIA curriculum, hedge funds, private equity, that kind of thing. We tell them, did they get an average score, a slightly above or slightly below average score, or a way above or way below average score, and we're comparing it to the lowest quartile of those who pass the exam. So think about that just for a second. I know that was a lot of information, but if I'm a candidate and I want to know how did I do, I really want to benchmark my knowledge against what I need to pass the exam. So when I get the score report back and I passed, well, there you go. I'm an average or above average in every case. If I wasn't successful in passing the exam, what I want to know is, where do I need to improve? How can I get through the next time? And that's where I think the score report comes in very handy, because you might find that for example, in real assets, you killed it. I mean, you got way above average. But in two other areas, say structured products or in private equity, you were way below average. This tells you where you need to focus your time for the next round.
Okay, now, so you touched on the CFA, and having gone through a master's program in finance, I would say that the majority of people who studied with me either had thought about taking the CFA exams or were already in the process of going through the exams. And that reflects on the average age of the candidates taking the CFA. And I think you mentioned last week that the CFA Institute has seen the average age of candidates going down. And that's probably a function of how general the CFA curriculum is. And I don't mean that in a bad sense at all. And CAIA is different because CAIA is very specific to one area, alternative investments. And as far as I know, there are not a lot of people during their undergrad that are thinking, okay, I want to be a commodities trader or I want to get into private equity. That's usually a decision that comes later on after having gone through some work experience. How does that reflect on your pool of candidates that you see coming into the exams every year?
Yeah, Leonardo, I think you hit the nail on the head. I mean, I think you actually described this very, very well. So the average age of CFA candidate, say taking level 1, has gone down. I don't think there's a question about that. In fact, I think it's fairly dramatic. And I'll get into why I believe that's so in a second. But yeah, being more of a generalist designation, if I make a decision that I'm going to work in the finance field and maybe I have a degree in finance, maybe I don't. Maybe I have a degree in economics or even psychology, but I'm going to be in the finance field because that's become my passion. I think the CFA is the stamp of approval in so many different markets that you do understand what's happening. You do understand the basics. I think that is kind of very important for people to know. So what about CAIA? So CAIA now, you're stepping up and you're saying, okay, I've worked in the field of finance, but I want to now get into, say, some alternative aspect. And that's when I think the CAIA designation kind of hits home for you. That's when you say, that's what I want to do it. So naturally, I think the average age of the CAIA candidate is higher than the CFA candidate. But now let me tell you what I think is going on in the world, because I think it's fascinating. The CFA, the numbers of people taking the level 1 CFA exam has absolutely exploded in the last 5 years, maybe even 10 years ago, but certainly if you plot it out, way up over the last 5 years. Why is that true? If you look at where those candidates are coming from, it's really driven by two markets, and those markets are India and China. And now I'm just going to give you my opinion. I don't have research to back this up, but it's my view that there's such intense competition for young professionals, say in China today, in India today, that the CFA has almost become a necessity. It's almost like something you have to have. And I think that, for instance, I say I'm an Indian student. I take the CFA not because I even know what it is, but because I heard that these other people have it, and I need to compete with them. And that has really caught on. And to the extent that I was told that the last year's CFA exams, level 1, 60,000 candidates came from India and China. Now, imagine that. 60,000 people, 100 and some thousand people take the CFA Level 1 exam. It's now gotten to the point that greater than half of those come from those two countries, and I'm willing to bet that most of those people are young people who really haven't started their career. So yeah, the CFA, really the age level has been driven down. Now, if I can project down in the future, CAIA has members and candidates in China and in India, nowhere near the level of percentage that the CFA has. So we are behind in that respect, but I think it's going to catch up. I think at some point, someone in China is going to say, okay, I have the CFA. Alternative markets are exploding in Shanghai. We're starting to trade derivatives and hedge funds. I'm not going to get the CAIA because that's going to differentiate me. And when that happens, I think you're going to see the critical mass being hit very quickly and the numbers of CAIA growing a lot. And it's going to be driven by the same young crowd as what's happened in the CFA world.
So do you also think that the percentage of CAIA candidates and members coming from India and China compared to the same percentage for CFA, I would assume that percentage is probably lower for CAIA. Do you think that's because of the development of the alternative investments markets in those countries? I would think that financial markets usually develop first in the traditional side, right? Stocks and bonds, and then they get into structured products and trading, hedge funds, private equity funds. Do you think that the lower percentage of candidates in those markets is a function of a lower development in the financial markets of those countries?
Yeah, I think that's very true. I think one reason why someone, say, in China wouldn't even know about CAIA is because the alternative markets haven't developed very well in China. They just haven't. Now, there are some exceptions. If you look at the CAIA curriculum, one major asset class is real estate. Real estate is a big chunk of the investment market in almost any country around the world, so that does exist. Mm-hmm. Another one that you see a lot, even in the very early stages, say in India, is private equity. So there's a sense that, hey, we have young entrepreneurs in India. We need to develop a market to bring capital, to feed them, to maybe create the next, big new technology firm. So you do have the private equity markets, but your comment is very, very true. If you look at hedge fund trading strategies in India and China, virtually non-existent. Let me just say one thing about that. Last time I was in China, I saw a headline, and the headline said that Shanghai, this is coming from, say, the top levels of the Chinese hierarchy in government. Mm-hmm. Shanghai has a goal of being the leading financial center of the world in 2030. Now, I thought about that. Shanghai right now is nowhere close to, say, London or New York or Zurich, for that matter. They're not close, or Singapore. Can that happen? Is the world changing so fast that in virtually 15 years, because that was a little while ago when I saw that, China will now be the center of financial activity in the world? Mm-hmm. Well, I don't think that's going to happen. I wouldn't bet on that, but then again, I've seen a lot of surprises in my day, and it wouldn't shock me to know that in 2030, Shanghai is trading in all these markets in a big way. And so I think that's another kind of way that CAIA will certainly develop in those kinds of countries.
Okay, so let's imagine I passed CAIA Level 1 and Level 2. I've fulfilled my 1 year of work experience requirement. I've paid my dues. I'm now a CAIA member. What is in it for me? Meaning, what is it that makes the CAIA designation really worth my time and my money?
Yeah, sure. I mean, we ask our members this all the time. This is a really important question for us as the CAIA Association, because we want to know, first and foremost, why are people taking our exams? And second, what do they want? I mean, what are they really looking for? And what I'm hearing from these surveys is that first and foremost, it's to get the designation. I mean, if you're going to rank order the reasons why people are signing up for CAIA, it's to get the education, and also at the end to put the 4 letters CAIA on your business card. Mm-hmm. Because people are really, always trying to build their human capital. I mean, that's a really smart thing to do in your career. Mm-hmm. And what CAIA kind of signals out there to others is that I understand these markets. And so that's why almost everyone who gets through our designation, passes level 2, and has the requisite work experience will sign up and be a member. We have a very, very high percentage of people that sign up and be members because that's what they want. They want to put that stamp on their card. It's really important to them. The other thing they do, by the way, is they frame their CAIA charter. It's very typical that someone will take it, spend $100 or whatever to frame it, put it up on the wall, because when people come in their office, they want to see that, right?
Yeah.
So that's number one. But one thing I have seen now that I've had a chance to travel a little bit and go to many of our chapters, we call our local areas in cities of people that have the CAIA, we call them chapters, is that CAIAs love to get together to network. And what does networking mean? It means to meet like-minded people, in a very social atmosphere, to meet folks, but it also means to understand what's happening in this local market. What companies seem to be gaining? What companies seem to be losing? Where might I want to think about moving in my current job if I'm not 100% happy with where I am or the trajectory I'm on? Where might I go? And we're seeing that this networking becomes really, really important. I'll mention one other thing. Keeping up with the field. So maybe you'll call it continuing education. What we offer all of our CAIA members is access to 2 journals. One is the Journal of Alternative Investments, which is kind of the academic journal for new research in alternatives. But we also have an internal journal called AIR, AIR, and that's for more of the practitioner-focused type of new development in the field. By practitioner focus, I mean not so much to develop a methodology and collect data and test it and show all the statistics and all that, but just to say, hey, this is kind of an interesting thing, like insurance-linked products. Really interesting that now there are products where people are actually investing in the life insurance of other people, which is really, kind of fascinating. And somebody who's in that market will write up a 5-page kind of summary on that market. And I think our members really appreciate the ability to kind of get that in a very easy to read and digest form to keep up with the field.
Now let's talk about something that I hear a lot when people discuss the CAIA designation, and that is its cost. If you're a 20-year-old in the United States or in Germany, let's say, paying, I don't know how much it costs anymore, but let's say paying $1,000 to sit for an exam, it's going to hurt, but it's not going to hurt that much. But if you're talking about the same 20-year-old in India or in China, that might be very expensive. So how does the CAIA Association deal with that?
Right. Yeah, it's a good question. And I think it's multifaceted. But I guess I would start by saying that when you have a country that has 1.2 billion people, just think about that for a minute and compare it to the country maybe you're sitting in and how many maybe millions of people are in your country, and this is 1.2 billion, that even though the average salary or average income might be very, very below what you would consider to be a sustainable kind of income, there are still some percent, and even if it's only 25%, that leads to hundreds of millions of people that have the means of of investing in their education. And so I take your question as being a good one and one of serious consequence. I just want to add that I also think that CAIA appeals to the folks in those countries that are probably in college, getting a degree, and thinking of careers in finance that might take them to many different places over the world. But still, having said that, it's still a big investment. We believe that we are priced competitively and realistically given the services we provide. So we're not ashamed of saying that our exam fees are where they are, because we believe that they're not only covering our costs, but we're providing real value. Okay. We do offer scholarship programs to students who aren't yet out there working, who really do have issues related to their ability to kind of pay the exam fees. But the other thing I want to mention is the membership fee. So if you become a CAIA and then you become a CAIA member, every year you have a membership fee. Mm-hmm. Well, what we decided to do, and we just instituted this, is we have an emerging markets fee. That is, if you're in an identified emerging market and you're a CAIA member, your membership fee gets reduced by quite a bit. I think it gets reduced by over 50%. Okay. And the reason we did that was to recognize exactly what you said, that there are cost differences in the world, and we should recognize that. And I believe that's going to become a really fantastic program in terms of it's going to lead to more people in India and China who attain the exam qualification to become a member. And I think it's not going to lead to kind of a bad feelings around the world, because I think everyone kind of realizes that this is not all kind of an even thing we're talking about, that there are very different wage scales in different countries.
Okay, yeah, that makes sense. Now, both Luke and I did our masters at the Frankfurt School of Finance and Management, and I noticed that the university had a cooperation with both the CFA Institute and GARP, the organization that puts together the FRM exams. And I know that they had scholarships for people who were sitting for both the CFA and FRM. And I know that CAIA has a similar program, and yet the university did not have a cooperation with you guys. So I was just wondering about the traction of the program and how you see that evolving in the future.
Oh, sure. So we, as a CFA charter holder, I'm well aware of that, and also the school that I am a professor, we are a partner program with CFA, so I'm aware of that kind of relationship too, and what that's about. At CAIA, we have what we call academic partners. And we do that because we believe it's important for CAIA in its development stage to become connected with the major thinkers in the area. And one way to do that is to attach yourself to universities. Okay. And we have very close to 50, a total of 50 academic partners around the world. They're not spread out evenly. I believe that if you look at it, there are more in North America than there are in EMEA than there are in APAC. But that's changing too as CAIA goes through, its development stage. We're finding more in Europe, more in Asia, and relatively less in North America. But anyway, we have these academic partners. So an academic partner would show to CAIA that it's an accredited university or college, and that it covers material that overlap to some degree with the CAIA material. That is, we want to attach ourselves to places that are interested in teaching these markets to their students. Okay. So if you can show that, you have that percentage, whatever that is, that minimum percentage, and you're accredited, we will consider you for an academic partner. And that's how we grew to this number of close to 50. And once you're a partner, we offer scholarships to students, and we put that under control of the main faculty member at that institution. So if I'm a faculty member, say, in St. Gallen in Switzerland, and I'm teaching alternative investments, then I probably will be responsible for determining who among all my students is most worthy to take a scholarship. And the scholarship really is a great thing for the student. All you need to do is cover just the actual cost of CAIA to put someone into the exam center. So it's way, way discounted. And we just feel it's a good thing to do in terms of kind of building our brand in the future. The other thing that the academic partner will do is we'll provide resources. We'll help bring, say, local professionals, say a hedge fund manager, into that university to talk to the class, tell them what they do, to try to get them interested in that area. So it's kind of like a bridge from academia to the profession. And we expect to grow that program too. It's now at 50. I'm sure that number will grow and grow as CAIA gets older and older.
Nelson, when I met you last week, you talked about the Warren Buffett Bet. And I thought it was extremely interesting, and I had not heard of it before. And I'm sure that some listeners will know what it is. But for those who haven't heard of it yet, can you tell us what the Warren Buffett Bet is?
Sure. So let me give you some background. One of the big stories in financial markets over the last couple of years has been the rise of passive investing. Passive investing is just the notion that the market's efficient. I'm just going to put my money in an index. I'm going to leave it there. And whatever the market gives me, that's what I take. So if we have a good year, I make money, my long-term investment portfolio grows. If the market goes down, that's too bad, but look, everybody lost. It was a bad year. So passive investing has now gotten to the point where it's actually growing at a rate faster than active investing. So active investing would be, say, from just a small investor's viewpoint, that would be giving your money to an investment advisor who will determine what are good stocks for you to be in and what are bad stocks for you to stay away from. So you're giving you're paying that advisor a fee. It's going to guide you into making good investments. So what I said about the passive story is that it's exploded. So now everyone's talking about passive investing. You get a little bit of, you get what the market gives you at a very, very low fee. So the fee question becomes important because on the active side, fees are higher. So I think everybody's familiar with this guy, Warren Buffett. He's probably one of the most successful investors ever. You know, he has his fund that he runs out of the state of Nebraska in the United States. And he's now to the point of his career where everyone looks to him as a sage for advice. So Buffett hopped on the passive investing story bandwagon. And he said, right around 2007, he said, I bet, and I'm going to put $1 million of my money behind it, $1 million, that I can beat any one of you professionals out there in a 10-year cycle, so not short term, long term, 10 years. And here's the bet. I'm going to say that after 10 years, I'm going to tell you what I'm going to do. I'm going to put my money in the S&P 500 index and leave it there. So whatever the S&P does over 10 years, that's my return. And you decide whatever you want to do. You know, what markets you want to go into, whether they're traditional or alternatives, whether you want to go into emerging markets, whether you want to do currencies or commodities, whatever. You choose yours, put it down on paper, and we'll see where we are after 10 years. So what happened? Protégé Partners, a hedge fund, steps up and says, we're going to do this, and we're actually going to do this in a very smart way. We're going to pick 5 what are called funds of funds. So fund of fund is a portfolio of hedge funds, and we're going to pick 5 of them. So we're going to be totally diversified, but we're going to be diversified in a good way, and you're going to be diversified in, let me just be crass here, in a dumb way, and we're going to beat you. Okay, so that was 2007. The bet starts in 2008. 2008 is a great financial crisis. Protégé flies out into the lead because Buffett loses about 40%. Protégé loses money, but nowhere near 40%. Well, then let's go to 09, 10, and all the way up to today. Every year the S&P has been up in those years. So the passive investor has done extremely well. 2016 is not over yet, but it looks like another big year. And where does the bet reside? Well, I have the figures for you. As of the end of 2015, so not even considering 2016, Buffett is up about 66%, and Protégé is up about 22%, 1/3. 2 more years to go. It looks like Buffett is going to win big time. Now, what does that mean? So that's kind of interesting. I think people are interested in that story. It's kind of a fun story. But what does it mean? It means that if we're going to have a market where over 10 years, most years are going to be up years and some fantastically up years, even if we have a horrible one year like 2008, passive investing is going to probably come out ahead of active investing. It's just the way it is. It's just a low fee kind of way to get the market return. So I think in the end, while Buffett's going to boast, he just picked an incredible bull market to make this bet. Kind of like Buffett's kind of, you know, that story about he can turn straw into gold. That's just the way this guy is. I mean, everything he does pretty much works out. Same here with this bet. So I would say, yeah, Buffett's going to win this bet. I don't think it proves that passive investing is better. That is, if we hit a long spell of bad years, and I certainly don't hope that happens, But should it happen, I think then you'll see kind of these alternative products that are there to try to create a soft landing in bad years. They're going to come out ahead. And I think that's one reason why people are very interested in hedge funds, because they tend to try to hedge the portfolio. So Buffett wins this one. There you go.
Yeah, and I think this is a topic that a lot of people misunderstand. They ask, why should I even invest in alternatives? If, for example, I can invest in the S&P 500 and beat a highly competent and, let's not forget it, extremely well-paid hedge fund manager. And the story here is different, right? The hedge fund manager is not going to beat the S&P 500, let's say, 9 out of 10 times. And I realize that I'm generalizing here, but the reason why you invest in alternatives in the first place is because you want to smoothen out those returns over time and be ready for, let's say, a 2007 and 2008 crisis when it happens. So the hedge fund manager is not really designed to beat the S&P 500.
Yeah, I was going to make that point even stronger. Hedge fund managers typically talk about how they're absolute return vehicles, meaning that they don't want to be judged against the S&P. A hedge fund wants to be judged against zero, meaning that what we try to do is make sure you don't lose money. And I'll tell you this, if you look over 20 years, even though the story I just told is absolutely the correct one, but if you look over 20 years, the S&P was down for those years. I think the 4 years are something like 2000, 2001, 2002, and 2008. Every one of those years, all four, hedge funds beat the S&P, meaning that, and that's, I think, good evidence that hedge funds really do the job when markets turn down. It's just that we've been in an incredible bull market. That's just the way it's been.
Just one last question before we go. Where can people find out more about you and the CAIA designation?
Yeah, thank you. Thank you for asking that. Well, first of all, CAIA.org is our company's website, and if you go there, that would be the one place to get information on all of CAIA's activities, be it as a candidate or a member. So I would emphasize to all you listeners, if you're interested in CAIA, CAIA.org. And with respect to my travels, if you're interested, and especially you members out there who may know me, I created a group in Facebook. It's a closed group, and it's called Nelson Sabbatical. Nelson is my first name. So Nelson Sabbatical. So if you'd like to try to follow where I am and who I'm talking to, you need to ask me to invite you in, but I would be glad to do that. It's Nelson Sabbatical. It's a closed group in Facebook.
Again, Nelson, thank you very much for agreeing to talk to us, and I'll be the first one to request to join your group, and hope to keep in touch.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
The information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. Any copying, distribution, or reproduction of this podcast without the permission of the creators of the podcast is strictly prohibited.